Happy Saturday, everybody. Welcome back to another video. And in today's video, I wanted to go over just my entire performance throughout the week as to how I was navigating price action Monday through Friday at the start of the month and the start of quarter two. So let's get right into it and talk about the trades that I took, what I saw, and how we operated. So starting off going into Tuesday, which was my first trade. I took 4 trades this week. I'm going to go over all 4 trades, break them down, top down analysis. So going into the day, we had a daily bearish fair value gap that was labeled here on the NASDAQ and the S&P 500 after taking out this external range liquidity pool here, because price moves from external to internal range and then goes from internal to external range liquidity. So my idea was monitoring price as we got into this daily bearish fair value gap. So I'm looking at price on that Monday or on that Tuesday. So let's label that off here going into Tuesday's price action. And I'm going to go to my hourly chart. I'm going to fast forward until we get into the time of our New York session. Let's drop a vertical line at 8 o'clock here. So let's keep on skipping until we get to that time right there. Boom. So at this time, what did we just create between NASDAQ and the S&P 500 with the idea, the fact that this is the daily gap here, this is the daily gap on the S&P 500? What do we have? We have the NASDAQ tagging that daily gap here while the S&P 500 failed to tag it there, creating SMT divergence at the daily bearish fair value gap tag. So my idea going into Tuesday's trading day was a bearish sentiment. So I wanted to see price sell off from this POI and trade lower. So going into that day, I was looking at this hourly bearish fair value gap, looking for shorts coming in and off of this POI. Now, this could have been premature looking for the sells here because I'm going to tell you right now, this did result in a losing trade. So I'm watching price on the hourly chart, and I see how we have the next 9 o'clock candle coming into the time of when we had equities open. So when this happened, I didn't see any sort of SMT, but I had the idea framed that this high would have been protected, so I could have still looked for shorts on here. But again, that would have been premature. So seeing how we had sort of like an hourly bearish candle set in, but we did have 10 o'clock high impact news, I did drop to the 5-minute chart with the idea of knowing that this high would not be taken out because of the SMT on our daily. Now, if I fast forward price after we had the 10 o'clock news here, we drop lower. And what did we do on this candle right here? Boom, we create a 5-minute bearish breaker block resting right here on the NASDAQ. So in my eyes, I'm looking at this as a potential breaker to take short. So I put my sell limit here, and I alerted my Discord that I was going short, targeting resting lows below us like this. And I'm going to go on the 5-minute chart on the S&P 500 here. Same thing. I anticipated that price was not going to take out that high. Seeing how we reacted from that hourly gap, I still wanted to trade lower because we're in a trending bearish market. The overall order flow of the market is bearish. So if I play out price a little bit here, I wait for my tag in right there. Boom. I'm tagged in short, and I'm in the trade here off of this 5-minute bearish breaker block, off of the bearish displacement from that hourly bearish fair value gap. Now, if I compare the S&P 500 and the NASDAQ, and I look to see what is corresponding and what is not, both the S&P 500 and the NASDAQ took out the lows that were set in from Asia on Monday, as you can see here. Take out the lows, take out the lows. So I don't have any SMT divergence set in at the lows for me to think that we would be displacing higher and taking out any highs above us because we had the daily SMT divergence. So I was confident in the shorts, but obviously the shorts didn't work out in my favor, watching this result into the loss and then price trading higher, digging deeper into that daily bearish fair value gap. So that was the first trade that I took throughout the week on Tuesday, which did result in a loss. Now I'm going to clear these charts here, and I'm going to go back to the daily, and you could see both NASDAQ and the S&P 500 tagged that daily gap. So I had no SMT within that daily gap for me to then frame my trade that I wanted to take initially to take price lower. And you guys already know, how did we result this week? We set the high of the week within this daily bearish fair value gap. And it is what it is. We didn't have SMT inside of the gap. No harm, no foul. Moving on into the next trade. The next trade we took was on Wednesday, and that was on gold. Now, we were looking at higher prices on gold and moving into the trading day starting at 8 a.m., which is our kill zone open for gold, euro, and pound for majors. So we had an hourly bullish fair value gap tag resting right here on gold, and we had a hourly bullish fair value gap tag on silver here. Now I want you to compare this low here to this low here on silver and gold. What do you notice? You notice that we are creating SMT divergence within the tag of that fair value gap. Gold is making higher lows here, while silver is making the lower lows here. So I'm going to be looking to frame longs off of this hourly bullish fair value gap to take out this hourly external range high. So if I go to the 5-minute chart and I'm looking for my long positions that I want to frame to take out this hourly external high, let's go and see how our reaction was to see if the framework of the trade was there. So if I zoom out and look at gold from this perspective, I know that this low and this low is set in as SMT divergence. So price should not be taking out this resting low here. Now I'm going to replay and go back here. What stands out to me, what is significant in this specific price delivery that I could utilize as my long POI? There was this down close candle resting right here post 8 o'clock that I'm waiting for price to close above for my long entry. Now that down close candle here ran this short-term low. So once price closes above that down close candle resting right there, that would be my order block and my change and save delivery that I could utilize for higher prices. So next candle here, we close above aggressively. Now, all I have to do from this point on, I alerted my Discord. This is what I said. I said I'm going long on gold at this order block tag resting right here with my stop loss resting here at this low or at the low of the candle that ran the short-term low. And I'm targeting a 1 to 2 risk to reward like that. So I'm going to pull this to the side here. I'm going to play out price, see what happens. Next candle, boom, tags me in, resting right there. So I'm in the trade. Now I'm just targeting these highs here and then the 1 to 2 risk to reward. Play out price a little bit, get the tag in there too. Consolidation on price, boom, we take us out right there. But the next candle just shyly misses the 1 to 2 risk to reward, literally by 0.3 points. So at this point, I took off half of my position on gold and I put my stop loss to break even, just like this. So at this point, I'm literally just risk-free trade. I took off 1R from the trade. That's fine. Play out price. Next candle, boom, stops us out. Unfortunate, and it is what it is. And if I play out price even more, you can see what happens. We inch and climb for the remainder of the day, and price ends up reaching our 1 to 2 risk to reward. But that's fine. Did I expect price to do this? Clear liquidity resting down below here, and then go to my take profit? No, but I followed the model. I followed my rules. I took my partials, and I went and protected myself going break even on this trade. So Wednesday was a winning trade. Fast forward going into the next day for the third trade of the week, we were looking at the S&P 500 and the NASDAQ. Now, this was when we had the announcement of the tariffs and Trump came into the market and basically we tanked. We got obliterated. And going into the day, I didn't really expect too much in regards to price action because of we had that massive overnight move. So going into the day, I was on caution mode and acting pretty safe with my trading and my execution. But this was the day before NFP, and I was only going to take something if it was perfect, A plus, all that sort of stuff. Now, that doesn't have to be in regards to the entry function. That could be in regards to the bias and where we know and confidently can tell where price is going to go to. Now, look at how price was trading here. We dropped, but look at the corresponding lows between NQ and the S&P 500 here and here. So we're in a bearish market. We know that we just had a bearish catalyst with the tariffs. And if I analyze price even more, looking at how we were trading, we had a higher high set in here on the NASDAQ. We had a lower high set in here on the S&P 500. I know that price should not be going above these resting highs here, just like that. This is my identification of protected highs or protected lows, the Kraken correlation between two correlated assets. So I know going into the day that price should not be taking out these London highs. That should be protected, and we should have a sell-off having a classic sell day. Now, if I go and I look at the hourly, there's an hourly bearish fair value gap resting here and an hourly bearish fair value gap resting here, but there's no SMT within that gap. So I wanted to refine my model a little bit more and go to the 15-minute to watch what was happening, because I knew that price was going to be a magnet to take out these corresponding lows on the S&P 500 and the NASDAQ. Wherever there's not SMT, I'm going to label as a draw on liquidity and price to reach either that liquidity pool on the S&P 500 or the NASDAQ. So my confidence going into the day was a bearish sentiment, with this being the draw on liquidity at 18,819 and 5181 on the S&P 500. So let's go to the 15-minute chart and see what was happening at this time and analyze, look at both the S&P 500 and the NASDAQ on this price delivery. Now I want you to compare at equities open at a specific key time what was happening here between the S&P 500 and the NASDAQ. So if you look closely, you could see at this run at 9:30, what did we do? We moved higher on the S&P 500, running this flat top high, clearing this short-term high. We failed to take that same flat top high on the NASDAQ, running this short-term high as well. So in my eyes, knowing that this is more SMT at the highs with no SMT at the lows, both S&P 500 and the NASDAQ cleared this liquidity pool. The only thing that we had was SMT at the highs, giving us a stronger indication that this move higher was just a run on liquidity to induce longs. So I was leaning heavy shorts at this time. So seeing how this happened at 9:30, we pushed higher. I think this is a Judas swing. I think price is going to go lower. I go to the 15-minute from the M1 or to the M1 chart here. Now, drag this out here. Go to this point in price right here. Now, from a 15-minute to an M1 perspective, what do we have here? We have price clearing liquidity with SMT at the resting highs. So in my eyes, this high here now is protected, and we should not be taking out this high on the NASDAQ, and we shouldn't be taking out this high on the S&P 500. Protected highs build confidence in a short bias. So if I'm going to execute a trade, I don't want to see price go above here. So that's where I would have my stop loss relative to my SMT high if I'm short. And what did we do at this point? We created a M1 bearish breaker block right here. So this was my short POI, as well as Nick in the Discord when we were calling out price live. So we alerted shorts at the tag of this bearish breaker block when this 1 minute candle at 9:43 had our confirmation of the closure below that swing low. I put my stop loss at the sweep of the high resting here, and I targeted a 1 to 2 risk to reward resting here. That was my entry. That was the alert of what I was going to do with this, because we also had the stop loss relatively close to the SMT correlated high. So if I play out price, I'm tagged in right here. So I'm short on the NASDAQ at this point at 944. Play out price. We move a little bit higher right here. We did come up all the way to this M1 bearish order block right there. And coincidentally, we set the high at that tag, because play out price even more. We drop aggressively, and price ends up running to our resting take profit. Boom. Just like that. So we almost got stopped out, but our order block saved us, thank God. That was the trade from Thursday. And you can see, if I go to the hourly chart, both the S&P 500 and the NASDAQ took out those corresponding lows that we were talking about from our hourly chart, giving us our framework for our short bias going into that day. Now, moving into today's price action with euro and the pound and what I was looking at going into the day. Now, I'm going to say this. I'm probably, like, Fridays when we have a massive expansion week wouldn't be the best to trade. I'm just trading in regards to how is the higher time frame order flow and what is price, bullish or bearish. And in my eyes, we're bullish on the euro and bullish on the pound. We've been trading higher, and dollar has been bearish. So going into the day, starting off just looking at the 4-hour chart, we had a 4-hour bullish fair value gap resting right here. That had SMT right here between the pound and the euro. If you could see, this low here is lower, and then the euro is higher within a fair value gap that has yet to take out an external range high that you could see corresponding to both assets here. This high hasn't been taken out yet, and neither has the same corresponding high, if I draw it out, on the pound. So I wanted to look for longs and just trade in regards to higher prices. Now, if I go to the hourly chart, because I wanted to just catch a small intraday move, a little scalp position. So watching price on the hourly chart, we had this hourly bullish fair value gap resting right here. We had a low set in on the euro, and then we had relative equal, pretty much higher low, slightly, ever so slightly on the pound, as you could see. It doesn't match perfectly, but it is still a higher low. Now, this could have been a slight red flag, but I wasn't going to neglect the fact that we had 4-hour SMT, we had hourly SMT inside of this gap, so I wanted to see if a reaction was going to play off on the euro, and I'm going to go to the 5-minute chart since we had these hourly and the 4-hour external highs and price has been bullish, so I'm going to continue just looking for the buys. Now, if I go to the 5-minute chart and watch, what stands out to me and what would I be taking the trade off of if I'm going to go long on the euro? If I'm going to go long, this is the down close candle that I'm paying attention to. Right here, this down close would be my liquidity sweep. This would be my short-term low that I got ran, and this would be my order block that I'm utilizing as an entry point and an entry function. So I'm waiting for price to close above that down close candle that ran the short-term low. I'm going to long it at the tag, and then I'm going to target higher prices just like that. So this would be my entry with my stop loss at the low and just targeting a simple 1 to 2 risk to reward. Just like that. So I play out price. We close above right there. That next candle closes above. So I have my limit set in. Now I'm going in here at the tag, and I play out price. We push up a little bit higher, come down, consolidate a little bit. It was chopped price action, just like this, and then it ends up stopping me out like there. But I can't complain. All I had to do here in this situation was just follow my rules. I'm playing the statistics. I have my edge. If the model presents itself, I'm going to execute. But we took 4 trades. We had 2 wins and we had 2 losses, and still ended up net positive on the week. But this is just me being transparent with you guys and just showing you an entire full week of how trading truly is when you trade full time. Not every single day is going to be a win, and not every single day can go to your expectations. You just need to know your edge in the market and then execute based off of your edge and your knowledge. But I'm going to keep on doing this with you guys. If I take multiple trades in the week, I would love to just recap everything just so that you guys can see what I see going into every single day and every single week. But I hope you enjoyed. If you want me to do more of these, just finishing off the weeks, just to have more clarification. I'm kind of utilizing this as a journal also too as well. So if you do like it, let me know in the comments. Like, comment, share, subscribe. But hope you guys all have a fantastic weekend, and I look forward to seeing you guys all again for the next upload next week. Be safe, everybody.